The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Stacey Burke from Stacey Burke Trading. A short video today on the closing range of the week. Friday reversal opportunities. Simple, repeatable setups closing out the week. Friday is the closing range of the week. Now, similar to Monday, the opening range of the week, I look for 3-session setups, just the basic opening range opportunities if and when they present. And the closing range is no different. 3-session setups, page 37 in the playbook. Just reviewing again the simple pump and dump model, dump and pump model for the week itself. Now, Monday's the opening range. Tuesday, day 2, typically expands the range on the front side of the week. Midpoint range, day 1, day 2, day 3, Wednesday, and then resetting into the back side of the week as a new day 1, day 2, day 3. And day 2 on the back side, we can see range reversals and range expansions if the market's in a trend trade situation. But Friday is the closing range of the week. Now, we had major red news today. We had non-farm payrolls, 10 a.m. ISM as well. And the important thing to understand is when the week is opening, we're starting the auction process from Friday's closing price. And when we're closing the week, we're closing potentially looking for setups. So we're talking about rinse and repeat setups on each one of these days, not on the same instrument, but the same opportunities on any instrument where we have scalable rinse and repeat opportunities. Now, Friday's the closing range of the week. So typically the go-to setup always for me is, in simple terms, a 3-session setup. Now, we talk about signal days. We talk about markets that close in breakout. Now, the go-to setup, I've talked about energies often on a Friday looking for a reversal opportunity. But markets that close on Thursday in breakout as the highest close or the lowest close of the week can offer us insight into instruments that may be offering us a 3-session setup to close out the week for a reversal trade opportunity. Now, understand that when markets close in breakout at the extremes on the 4th day of the week, so we're on the back side of the week, we're going into the closing range of the week. When we have breakout traders triggered at the highest close or lowest closes of the week, and we're looking for a reversal trade setup opportunity, understand that we have breakout traders in the markets on higher time frames, already in the markets, 1 hour, 4 hour, daily. Obviously, when those time frames are involved, all time frames are involved. And now traders, if we have a reversal opportunity, may be caught up high or down low and be low-hanging fruit for the reversal trade opportunity. What type of behavior of price do we want to see? We want to see it break out again on the day, on Friday, and fail in the timing window for the parabolic reversal trade setup opportunity. Simple, scalable, repeatable. That is the whole point. Simple, scalable, repeatable. Regardless of the instrument, every single Friday I can do the same process to identify a high probability candidate or have candidates on my list. How does price behave on the day? Is it still available in my session as a best trade candidate? Now, for the purposes of this video, we're just going to be looking at the U.S. session. Some simple rules. We have major red news, non-farm payrolls at 8:30 and ISM at 10 a.m. So that means I'm not going to start being able to enter the market until at least 10:01 a.m. Why is that? Because I'm not going to trade until all the news has been digested heading into the closing range of the week. Simple rules. That just keeps me out of any high-risk situations, wicks, volatility, anything that could happen that's unexpected, because I don't risk any significant amounts of capital prior to major red news releases. Those are my rules. And so that means that for this simple model, we're just going to wait until after the news has been released. So if you do enter an instrument In between, after non-farm payrolls and before 10 a.m., be aware that the next release could impact your open trade, at which point you could either lock in profits, close the trade, or adjust your stop loss. But even with a high volatility release, if you have a stop loss in place, sometimes there can be slippage, gaps on the fills, and your stop loss could get filled at a worse case scenario. In order to understand what we're looking for, let's look at some example templates that have been printed off for muscle memory, because I'm looking for the same setups. We have 10 a.m. major red news. It's not necessarily going to impact the energies, but I'm looking for the close and breakout at the high of the week. I'm looking for a consolidation, a breakout again, and then either a second breakout or the fail breakout in our timing window for the collapse back through towards the other side of the range. Understanding that once we have breakout traders in the market and this market breaks out again, if it is going to reverse, all these traders on longer time frames are going to be caught up high, and the market ACB should not be coming back and closing at or near the extreme. Another example on oil, May 10th, Friday, close and breakout on Thursday, high of a week close, breaks out again before pumping back up into our 10 a.m. hour after the New York Open and the collapse, closing at the extreme. An ACB Friday reversal trade in May on West Texas oil. But I also want to point out to traders another different examples where, of course, we can get a market closing and breakout, and it just doesn't set up the same. We have a market that breaks down prior to our 10 a.m. hour and collapses into the low made earlier in the day in the London session, and that's it. That market pulls right back inside. In comparison to the other ones, which are reversal setups, this market is still making higher highs and did not demonstrate the reversal trade setup behavior. If traders were to take this and they took it in the 9:30 open, this is a nail and bail opportunity. But I'm being aware that once this market clears that level, it's susceptible to reversing back inside. Market that closed in breakout and continued to make higher highs, putting in a peak formation low underneath of closing price, demonstrating that other time frame buyers may still be driving this move. Other time frame buyers, they are not trapped. There's no trapped volume up top for this market to break down through. So sometimes traders say, well, it closed in breakout and it didn't work. Well, no, this was not the best candidate for the reversal trade setup. But if traders did take this trade, be aware that other time frame buyers could be coming into the market underneath of these levels when they've put a peak formation in place like that. Another example of a template to avoid: natural gas, 10th of May, market closed in breakout at the high of the week, proceeded to go higher, but then broke down prior to our U.S. session window. And this is an example of where traders can get caught chasing a market and actually get poor quality market conditions afterwards. This is not an ideal setup for the reversal trade candidate in the U.S. session window. We need it to push higher, break out again, and fail. This market would be off the list. So it comes up on my instrument watch list. But when I get to my timing window, what this market needed to do was pump up, break down into our timing window for the parabolic collapse back into towards the low of the day, into towards the close of the session. Now, yes, this market closed down low, but traders are forced to chase this depending on where they're at. And this is a poor quality setup once it breaks down. I would not be touching this market. And that brings us to today on oil. We had a market that closed in breakout. It broke out again in the London session, an engulfment, and then a collapse back inside of the high of week level. That creates a triple top neckline level on our last little peak formation, our last little push up. We'll just accentuate that for traders to see. This breakdown on that last peak effectively gives us the thesis that the high of the week is now locked in as we head into our U.S. session. First hour puts a lower high in place. Second hour, New York Open pushes higher into our peak formation. 10 a.m. opens with inside of that middle peak formation and an engulfment candle. We'll zoom in here. Our 10 a.m. engulfment candle. Our universal entry criteria is met at 10 a.m. on the engulfment after 3 pushes, 1 hour, 2 hours, and our third hour opens for the parabolic collapse back through the low of the current day. Now, when we back this up, we can see that higher level longs were caught trading after that market exploded late Thursday. So anybody trading above this level now is caught buying high on other time frames, on smaller time frames. We have a close and breakout that triggers potentially breakout traders now getting into the markets. We trigger breakout traders again, but recognize also when this market pulls back underneath, if they go back up, they allow traders who are on the wrong side of this market to get out of a potentially losing trade. The market slowly fades and collapses back into and other time frame buyers from late in the US window. Close and breakout at the high of the week. A breakout again that reverses, giving us the thesis that the high of the week is now locked in place with a triple top, and then 1 hour, 2 hours, and a third hour collapse. And this now market fading probably into the close. It's got these longs who are caught on longer time frames buying high, and this is the Friday reversal setup. Now, an excellent trade taken today by a member in the community was on soybeans, on a market that had closed in breakout at the high of the week on Thursday's closing price level. So we have a market that's closed in breakout at the high of the week, traded outside of that high of day level from Thursday before breaking out again at the New York Open, breaking down, and our 10 a.m., our third hour opens in the US window, traded outside of that high of day level from Thursday before breaking out again at the New York Open, breaking down, and our 10 a.m., our third hour opens in the US window. 10:15 a.m., our engulfment, our universal entry criteria, page 29 in the playbook is met. An additional opportunity for traders to add into this thesis being back towards the low of day level. Now, this market, if we just squeeze this chart up, didn't get all the way down to the previous day's low, but again, an example of where once they've cleared out the last peak formation low, traders could aggressively move their stop losses down to be locking in as much out of a winning trade setup, a reversal trade setup on Free Cash Friday, especially when we see the consolidation moving sideways after that level's been taken out. Friday reversal, third hour, high of week, a market that closed in breakout, a beautiful trade taken by one of the members in the community today. This is another example. This is a currency pair. Friday, close and breakout, high of the week, breaks out again in our London window, putting a peak formation high in place. We had major red news heading into our US window. That market broke down, giving a death candle, an engulfment candle, and then consolidation into our 10 a.m. hour for the parabolic collapse through the low of the current day, but to the low of the previous day, the Thursday. So we have an all-in opportunity. Once this market engulfs and consolidates, we have a lower peak formation high underneath of closing price. Paul Tudor Jones, think of your entry point as last night's close, the consolidation and the parabolic collapse. And a great example of why it's important to lock in the money once a level is hit, because we see this market pull back into the close on Friday, into the weekend. And that's an example of where traders want to be locking in the money on Free Cash Friday. Another example, a currency pair, we had the market closing in breakout, not quite the highest close of the week, but almost the highest close, but right near the high of the week. The market went parabolic in the London window, breaking out before pulling back inside. Bit of volatility, pinning down into that low of the current day, and then pumping back up into our peak formation high of day made, high of week made in the London window. The difference with currencies, though, we start trading 1 hour earlier. We roll over 5 p.m. New York time, the currencies begin to trade, whereas oils or energies, metals indexes have a 1 hour gap, and their 4 hour rollover time is 1 hour later, meaning that 10 a.m. is the beginning of a new 4 hour cycle, where on currencies, 9 a.m. New York time is the beginning of the new 4 hour cycle. New York Open engulfment
inside of our universal EMA for the high of day level reclaimed, and an opportunity to add into this trade above closing price and the parabolic collapse back through the low of the current day, and another area of consolidation, evidence of where to be locking in profits. Whenever a market breaks a level and begins to coil sideways, tighten those stops up, take profit levels, or lock in the trade. It's Friday, lock in the money and walk away. Another Friday reversal template on the British yen crosspair. An example, again, just a simple Friday closing range reversal setup, a 3-session setup, page 37 in the playbook. It's simple, repeatable, and scalable. Are you going to find them every single week? Not necessarily, but when you do find them, it's easy money trade setup. Be patient, sit on your hands, understand, master the templates, build your muscle memory. These trades show up frequently, simple, repeatable, and scalable. Be patient, let the trade set up. Just a simple Friday reversal trade setup opportunity. Keep it simple, traders. Rinse and repeat the same setups, any instrument, whether you're long or short. Today, we've mainly focused on shorting. I have a bias towards shorting. They were simple, scalable opportunities. Keep it simple and don't ruin your weekend. Have a great day, traders, and may the markets go with you.